For just a broad kind of rebalanced thematic, Julia, the implications for the S&P ASX 200, what are the implications?
Well, once a quarter we get rebalancing from the Standard & Poor's for the benchmark indices, and the big one that we're watching is the ASX 200 index. This is a benchmark index, and this is the one that a lot of index fund managers look to replicate. So usually we do see a little bit of front running into this announcement, and some fund managers trying to guess which stocks will be added to the ASX 200 index, and of course which will be deleted. Today we heard that IINet, Maverick Drilling as well as McMillan Shakespeare will be added to the index on the close of the 21st of December, and these are stocks that have had fantastic performances in 2012. IINet as well as McMillan Shakespeare up by around about 50%, and Maverick Drilling absolutely shooting the lights out this year, up by a massive 350%. On the flip side though, we will see some stocks coming out of the index, and they include Intrepid Mining as well as Link Energy and McMahon Holdings as well, and these shares of course have come under pressure. The last rebalancing announcement that we saw was in September, and since then I guess if we have a look at how some of those additions and deletions have fared, we did see some additions. Drill Search was one of them. Unfortunately it's down by 4% since that announcement. SAI Global also down by 5%, and we've also seen Skilled Engineering down by 12%. On the flip side, some of those stocks that have been deleted from the ASX 200 index have actually seen a bounce back. We've seen Aquarius Platinum up by 16%. We've also seen Ramelius up by 15%, although Panos has been down by 7%. But of course, for the year, these are stocks that have decreased by around about 50 to 70% in value. So altogether, it does look like some new changes to the ASX 200 index almost at the close of the month, and we should see a little bit of an effect in terms of short-term price action as fund managers look to rebalance their portfolios based on their benchmark indices.
Hint in the marketplace in Australia especially.
That's right.
Julia, yesterday dominating our headlines, Network 10 already flagged, as Moira was saying, you know, the amount of money it's tapped the market for equivalent to its market cap this year. Where to next? Because, you know, according to some of the analysis, there's a sort of a privatisation by stealth, potentially amongst some of the cornerstone investors at play here.
I think, Carson, there's been talk of potential privatisation or rumours and speculation around the potential privatisation for a while, and that's because 10's share register is dominated mainly by 4 shareholders. If we have a look at Murdoch, Packer, as well as Gina Rinehart and Bruce Gordon, they own about 42% of the stock. So the potential for privatisation is certainly on the table, and that would take the spotlight and the focus away, I guess, from short-term performance more into a longer-term performance. But I guess the key here is that we have seen the outlook for 10 deteriorating since the AGM that we saw in October. So we are expecting to still hear more from 10 around what exactly we are expecting in FY13. And I guess it is a difficult space to try and predict. If we have a look at some of the brokerage houses and what they are predicting in terms of normalised net profit, we have CLSA predicting $33 million for the current financial year. We have Morningstar predicting $18 million and UBS predicting $3.8 million. So you can see that there's a huge range, and revenue is quite difficult to predict in terms of 10 because we don't know how successful some of their program is going to be. Of course, on Monday we will see 10 shares coming back online. It is a highly dilutive capital raising that they've done. The last traded price for 10 was 32.5 cents. They've done a 445 non-renounceable issue at 20 cents. So the ex-theoretical price is 27 cents on Monday. But of course, we could trade lower than that if we do expect to see some more downgrades come through because of the weakened outlook that we've seen for 10.
So just how's that going to perhaps dictate volumes inevitably on our market today?
Well, I guess we might see some positioning ahead of the non-farm payroll numbers, but altogether it does look like it's going to be a positive one for the Australian share market. We saw the Dow Jones Industrial Average last night hitting a 1-month high, and that's despite some weaker growth forecasts coming out of the European Central Bank for the Eurozone. The ECB did keep rates on hold there at a record low of 0.7%, but all up for the week, it looks like it's been those defensives which have outperformed. Healthcare as well as telecom up by around the 1% mark, while we have seen the energy and the material space really dragging down our market. But it does look like we'll see a bit of a flip of that today, and we are expecting to see the mining space as well as the banks helping to support our market today.